Yo, I ain't here for the money, I ain't here for the fame. Though it might be nice to own a jet plane, I'ma do it all for you. Come along and see it's true, but the world is pretty cold. You're my boy, Blue!
What's going on, YouTube? It's your boy Blue here, and today I'm coming at you with showing you how to read the stock charts, the basics of reading the stock charts on what is a candlestick and what you're looking at. This may be a lengthy video, so if you like the video and you complete it, drop a thumbs up and subscribe for more content. Okay, this is mainly what I'm going to be doing on the weekend, is breaking down and showing different things that I've learned in the stock market as I've traded for a year and a half now. And today is just basically going to be about the basics. Now, what we're looking at right here is Netflix. NFLX is Netflix. It's what a chart looks like. You can have Netflix, Apple, Amazon. It's literally thousands of ticker symbols that you can look up to see what their stock is actually doing for the day. Like this is the intraday, and you can look up the daily to see what the stock is doing every day, or you can look up like the weekly charts to see what's going on for the weekly. And you use these in different ways depending on what type of style you trade. If you trade in day trading or swing trading, you have the minute chart, which is just more candlesticks and the trend. These are like, they trend certain ways depending on the way that stock is running for that day. So right now I'm just going to look at Netflix, since I already had it pulled up in the first place. And I'm going to break this down a little bit for you all. So down here at the bottom is your times. If you're on a daily or intraday, it's going to have the times down at the bottom. The closer you zoom into it, the more, like, the closer the time you're going to have. So like 9:30, 9:45, 10 a.m. These are all a.m. On the side, you're going to have the price of the stock. And what you're looking at with these are called candlesticks. Now, candlesticks are more of, like, you can have it in candlesticks, you can have it in a line graph, but most traders trade with candlesticks. And candlesticks break down what the human emotion are at the moment, far as what the stock is doing. If you see a bunch of red candles, they usually mean that the stock is heading down. If you have a bunch of green candles, they usually mean that the stock is heading up. And they always correlate with what the price over on the side of the chart is. So say that this is considered the body. This solid part that's filled in is considered the body. The tops are considered wicks, which means like this candle right here at the top. You got the open. This is where the candle opened, where it started. And they start like, I'm in the 5-minute time frame. So it starts at, this candle started at 12:15. As you can see at the bottom, it says 12:15. So it opened up right here at 346.05. It came down, which these are considered wicks. On each end is a wick. So it came down, the price came down, then it came back up and continued up, and it stopped at 346.84. And then it came back down, and where the body stops at is considered the close. So that makes up one whole candlestick. You got the opening, you got the two wicks, and you got the close. And each candlestick will be like that. Some of them don't have wick on one side. It may not be at the bottom. It may not be at the top. They may be short. They may be longer wicks, depend on what the stock did and within that 5-minute range. With the red candles, it's the opposite with the body. The body is going to be this, instead of it being the bottom being the open, it's going to be the top of the body, which is the open. It popped up, the stock popped up, sold back off, came all the way back down, and then was bought back up, and it closed right here at 345.53, and then the next candle started, and it continued to push up. So when you have like the big green candles like this, and it's just completely filled, that's an indication that the stock is moving up. You may have multiple green candles like here, meaning that at that time the stock was just, people were just buying it up, buying. And then you have people, once it got so high and people didn't think that the stock should go any higher, they would sell their position and the stock would start heading down. So you have you had a red, then you have people that's buying a stock, then you have more people selling, and it just shows that there's more people selling when it's going down than buying, and when it's going multiple green, there's more people buying than selling. And when you have like this, it's just continuously going sideways. That's called chop. People, you may have a couple green, couple red, couple green, couple red. So it's just stuck in this tight range where it's not moving at all until you get more red than green. Then it starts to come down and it's selling off. Now, with trading the stock market, you can actually trade the stock as when it's going up. You can buy the stock as it's going up, but you can also short it. It's something called shorting a stock, where you borrow shares from your broker at a higher price, and you basically promising to give them back to them later. So if you say you shorted it down here, you tried to short the stock down here, and at 342.77, and the stock continued to go up, you said, okay, you losing money, because if you shorten and the stock is going up, you're losing money. So if the stock continues to go up and you continue to lose money, at some point you're going to want to give your broker's going to want those shares back. So if he gave them to you at 342.74 and you lose so much money and you just buy back at 345.56, you've lost money in the market. Now, if you short it up here and you got the shares from your broker for 345.66, and when you decided to give them back to him, you gave them back to him at 339.54, then the money that in between that is what you've made. So you can make money on the stock market when it's going up, or you can make money on the stock market when it's going down, depending on your strategy and the setups that you have to play the market. Now, let me cover this down here too. Down here with these, they look like candles, but they're actually called volume. And the volume is the amount of shares that people are rotating in and out within that time frame. So you will have it down here. It's lined up with like this big green bar. You will have a green volume bar, and the amount of shares that's traded in this volume bar, just this volume bar alone, and in this candle, it would come up to being right here. Well, it's move, but you'll see volume right here. It's the amount that's next to it. So when I go to this volume bar, it says 307,937. That's the amount of shares that was traded in that 5-minute time frame, and it's green because it was a lot of buying going into that time frame. So then you go to the next bar and it's a green candle, so the volume bar is green too. And if you look up at the volume at the top is 198,844 shares rotated in between that volume bar. So as you go along, you see them going smaller and smaller and smaller. So you're getting less shares traded and until something big happens, or it's usually bigger at the beginning of the day and near the end of the day, the volume is, unless something happens in between the day to, like, your president tweets out something and cause the stock market to go in a frenzy. Then you may have a lot of selling or a lot of buying, depending on if it's news and it's catalyst out in different stocks. Like Netflix may, in the middle of the day, have some kind of conference call or earnings or something like that that can make the stock go into a different direction, either spike up or just dump out. There's ways to find out the news. There's news feeds that you can read or purchase, or even on this platform, which I failed to say what it is. The platform is, which I'll tell you now. This is TD Ameritrade's Thinkor Swim. So this platform is actually a free platform that you could download from TD Ameritrade if you want to follow the stock market. Other platforms may charge you a monthly fee. This is probably the best free platform that you can get. I think sometimes they may say that you have to deposit a certain amount of money, maybe $50, but they don't mess with your money. So you can deposit the money and then take it out once you have your platform and it's live stream. You can actually simulate trading. So while the market is going on, you can take fake trades that won't even impact your money, just to get a feel for the market and learn to trade. And I would recommend that you would do that anyway before you go throwing money at the market, is to do more studying and find out how to trade before just sticking money in, because these are all like big stock names are all traded with hedge funds and a lot of professionals. There's retail traders like myself out here who trades the market, but we can't really make these move the way they do. It's the big money that makes the stock market move when it comes to trading these big float, big cap stocks. You have smaller cap stocks and smaller float stocks that can be influenced, where they only have maybe a million shares to trade, and somebody can come in and buy 50,000 shares of a stock that's $3 and move that stock. Whereas with these, they're hundreds of millions share floats. So retail traders can't even move these. All you can do is figure out what the setup is, the trend of the stock, and try to trade it for that day. And you can trade it for the day, you can trade it for the week, you can trade it for the month, depending on what type of trader you want to be. You have to figure that all out before you even start trading your money, what type of trader you want to be. You can be a day trader, you can be a swing trader, you can trade Forex, you can trade cryptocurrency, you can trade the stock market, you can trade, but there's multiple markets you can trade. Corn, rice, and beans, whatever you want to trade. Oil. I like to trade the stock market, the ETFs, and I hope that it's other stuff on my charts that I will address later on, but I just wanted to give you all the basics of the time frames. So if you put it on a day, the one day, you'll have it'll show up by the days down here the closer you zoom in to it. So each candlestick is representing what the stock market did for that day. And then you can do it for the week to see what the stock market's done each week. This is every candle is a per week. But I trade off of the 5-minute candlesticks, and I trade off of 1-minute candlesticks. For the most part, I'm using the 5 minutes. I may use the 1 minute for entries. Then I'll use the 5 minutes to see what the stock is actually doing. And that's the way that I trade. Everybody's different. There's no one size fits all. There's no holy grail or nothing. You have to find what works for you. It takes time, and you need to learn from somebody how to trade to the stock market. Don't just go out here and be a gunslinger and just throw your money in the market and think that you can move it, because you will get ran over and get your lunch money taken from you, like I have many of times. So I recommend a couple traders that you can go to and check out, starting with Clay's course to break down everything. And then after that, you would need a mentor. Find some type of trader, decide what type of trader you want to be, and what if you want to be a scalper, find a trader that's a scalper that has maybe a course or that does mentors. For me, I'd like to trade intraday, so I like to trade longer time frames. I don't like to trade quick in and outs. I like to trade like I want to trade this big move right here and hold through the whole move. Or I want to trade maybe the stock trends for the day. Let me see. Say like this from here to here. So I would want to get in at noon and the stock market closes at 4. So I would want to hold through all of this. I don't want to trade in 2 minutes and stuff like that. So I had to find people that traded the way I wanted to trade, that traded the setups that I wanted to trade, which Smash the Bid, I would go with Smash the Bid or Pat Mitchell with Trick Trades. Both of them are excellent mentors. They both have great content. You can't go wrong with neither one of them. Pat trades options, but for the most part, he's great with teaching you how to trade setups for the equity. And if you can learn how to trade options, you can learn through buying his course, or you can go to Smash, which he has good setups for trading the options. And you can just go through. You don't have to buy his course, just get into his chat room, and he has videos and everything. Pat has videos for trading the equity, but you want to go to Clay to get all of the basics. You don't want to search Google and try to put them pieces together yourself. That's kind of like trying to put an engine together and somebody throwing all the pieces to you of the engine, and you hop on Google and find out what each piece is, but you don't know what order it goes in and what position, how it's supposed to look. That's why you want to get the whole thing with Clay's course. If Pat or Smash comes out with one, I would recommend going to them. But for now, I'll say Clay's course. And then if you want to decide to go with trading options or trading equity, I would go with Pat Mitchell with Trick Trades or Smash the Bid. And I'll leave both of them down in the description, links to their home pages, and you can check out their prices. But anyways, if this video has helped you, I know it's kind of lengthy. If it's helped you any, and it helps you be able to follow along with me, leave a thumbs up, comment, and subscribe to my channel. And I will see you all Monday morning or Monday afternoon after I've taken my trades. Later.
Yo, I ain't here for the money, I ain't